Okay. I call the Commissioners' meeting of February 15th to order. Welcome, everyone. It's a beautiful spring day out there today. Welcome back, veteran Patrick Rambo, who's going to lead us in the Pledge of Allegiance, and it's always nice to see Pastor Larry Walthauer, who's going to lead us in the invocation.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Let us pray. Telling God, our Father, we thank you this morning for your mercy, for your grace, for your love. Pray for your presence, for your protection, for your provision, and for your peace upon this commonwealth, this county, this city, this community, and this country. We thank you, God, for who you are, and we thank you for whose we are. And we give you praise, honor, and glory for you and for your provision in this place. Guide us and allow our decisions to exalt your glory, that you may be glorified in all that we do. It is in thy name we pray. Amen.
We'll move on to item number 2 on the agenda.
I'll make a motion to approve the minutes from the February 1st, 2023 Board of Commissioners meeting as submitted.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. I will open it up for any public comment. I will move on to the consent agenda.
I make a motion to approve the consent agenda items listed below for the York County Office of Children, Youth, and Families.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. On to new business.
I make a motion to approve a contract between the County of York on behalf of the York County Treasurer's Office and Keystone Print and Stitch, New Cumberland, Pennsylvania, to provide 2023 real estate tax bills printed copies for a total cost of $20,796.70.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a contract between the County of York on behalf of the York County Treasurer's Office and Docio, York, PA, to provide the processing and mailing of the 2023 real estate tax bills for a total cost of $34,650.41.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a purchase between the County of York on behalf of the Facilities Management Department and Berkshire Systems Group, Reading, Pennsylvania, for a Judicial Center fire alarm upgrade for a total cost of $162,490 under a PA CoStarz contract.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a purchase between the County of York on behalf of the Facilities Management Department and NRG Building Services, Harrisburg, Pennsylvania, for the Judicial Center lighting control upgrade for a total cost of $57,750.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a purchase between the County of York on behalf of the Facilities Management Department and Berkshire Systems Group, Reading, Pennsylvania, for a card access system for the Human Services Center for a total cost of $89,318 under a PA CoStarz contract.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve the changing the composition of the York County Conservation Board of Directors on behalf of the York County Conservation District to 4 agricultural directors, 4 public directors, and 1 county commissioner.
Second.
I have a motion and a second. Just for the public, I do sit on the board, and there was a death of one of our directors, so that's why this motion is on here today, to accommodate getting a new board member to fill that position. Any further discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a contract between the County of York on behalf of the Human Services Department and the Pennsylvania Care Partnership, Harrisburg, Pennsylvania, to provide for the continuation of the System of Care initiatives for a total cost of $200,000 for the period of September 30th, 2023 to June 30, 2024, and it's paid from grant funds.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a contract between the County of York on behalf of the Parks and Recreation Department and Herbert, Rowan, and Grubik, York, PA, to provide and develop a capital improvement plan and funding strategy and a project case statement for the York County Heritage Rail Trail for a total cost of $16,000.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I make a motion to approve a contract between the County of York on behalf of the Court Administration and West Thompson Reuter, Eagan, Minnesota, for judges' online subscription for a total cost of $287,392.26 for the period of July 1st, 2023 to June 30, 2027.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
Motion to approve a professional services contract between the County of York on behalf of the Department of Emergency Services, 911, and MCM Consulting Group of State College, PA, to manage and coordinate the 911 Center renovation project at a cost not to exceed $88,309.75.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
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 Opposed? Motion carries.
Motion to approve the following applicants to be awarded through reimbursement the Marcellus Shale Legacy funding amounts as listed below in the agenda.
I will second the motion.
I have a motion and a second, and I did ask Wade to prepare some information to share, so I will pull that up.
All right, good morning, Commissioners.
Morning.
So I was here in December and brought some recommendations to you from the Open Space Committee for the open space funding, and then also the Marcellus Shale funding. There's a map shown here that shows all of the applications that came in for the 2022 grant round. That includes the open space funding and Marcellus Shale funding applicants. The open space, there was 2 land acquisitions that were funded, one in Franklin Township and one in Hellam Township for over 500 acres, and that's working with the Central PA Conservancy and Lancaster Conservancy. There's also, all of the yellow dots on there show the applications that were approved, and again, that's open space and Marcellus. There's also four of those yellow dots on there for planning projects, and open space funding was used to assist those projects because they do go to support open space protection. And those were in Springettsbury Township, New Freedom Borough, Chancellor Township, and Seven Valleys Borough. The remaining points on there are the Marcellus Shale funding. It was recommended to fund 7 projects in December. Those projects were in Warrington Township, and on the map you can see the different planning regions that we use to help spread the funding around. We want to make sure it gets spread around the county as best as possible for eligible projects. Those 7 projects were one in Warrington Township. Get my recommendations here. One in York City, one for Eastern York Rec Commission in Hellam Township, another one in Hellam Township. That's the number 3. It's right on the border of Region 3 and Region 2. Glen Rock Borough, Warrington Township, Delta Borough, and Hanover Borough. The group had worked with Tyler, the Chief Financial Officer in the county. We've been receiving Marcellus Shale funding since 2013. So the Planning Commission is acting as the program administrator. We work with the Open Space Committee. And we took a dive in and looked at a lot of those previous projects to see what was still out there, what projects were finished, was there any excess funding that could be used to fund some of these other projects. We did find there was $118,000 that was earmarked that wasn't used, so we were able to allocate that to additional projects. The Open Space Committee met a few weeks ago and took a look at all the projects that were left over. We took a look at what projects had already received Marcellus Shale funding or open space funding, tried to spread it around the county as much as possible, and then we also looked at types of projects. We had some park rec projects, we had historical projects, stormwater, water access, community gardens. So based on that, the Open Space Committee is making the recommendations that were shown today. For Wrightsville Borough kayak canoe docks, ADA accessible kayak canoe docks, Dallastown Lions Club community park improvements, Brogue Community Lions Club park improvements, and then Manheim Township park improvements. I do have a list by region, what was requested and what was funded. So I'll go from north to south. Region 4, which is the northern region, there was $40,000 of Marcellus Shale funding requested, and $40,000 had been approved in December. The Greater York West, which originally we thought number 3, the Codorus Furnace project was in there just off the map, but that is actually in Region 2. Greater York West, there was $80,000 requested, 0 approved. The Greater York East, there was $260,000 requested. There was $65,000 approved, and then today there's a recommendation for an additional $40,000 approved. York City, there was $15,000 requested, $15,000 approved. The Southwestern region, number 5, there was $120,000 requested. There was $40,000 approved and $40,000 recommended today. The South Central, which is Region 1, there was $55,000 requested. There was $15,000 approved. And the Southeastern region, there was $130,000 requested. There was $35,000 approved and then $40,000 recommended today. So hopefully that gives you a snapshot of where the requests were coming from and where the recommendations are going.
Thanks.
Can I just ask one question about the Marcellus Shale funding? For the public, we did a tenth of a mil for the open space project, and that comes in yearly through taxes. Marcellus Shale is usually, I think, a one-time check a year from the state, from World Wells Drilling and stuff that comes into us, and I understand that varies. I think sometimes we got 250,000, we got 450,000. It varies, I guess, with production. But are we saying now that from the check we got from last July or June, whatever we get it, that the 118,000 we're zero balance now as far as funding allocation from that fund?
Yeah, everything, if we allocate the $418,000 today, everything's earmarked. The way it's handled is through a reimbursement process. So the account has money in, but as we get the proof of payment and invoices in for those different projects, then we'll send that out. But earmarked, after the $118,000 is earmarked, it would be 0 left until the 2023
Okay.
round.
And are you still doing multi-year grants for people if they have that request?
They would have to request it every year. There
Right.
are some legacy projects in there that were multi-year, but every year we have an open round for applications, and we would review them at that time.
Okay, thank you.
Any other questions for Wade? Thanks, Wade.
Yep.
Hearing none, all those in favor signify by saying aye.
Aye.
Opposed, motion carries. Hold on a second, Ron, let me get it. There you go.
Motion to approve a feasibility study for the secure juvenile detention space on behalf of the Youth Development Center in an amount not to exceed $10,000 to be paid out of Capital Reserve Prison Projects account.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Motion to approve the tax refund register 2023-03, authorizing payment of York County real estate tax refunds totaling $14,061.50.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Motion to approve the weekly disbursements for the week of February 8th, 2023, totaling $6,207,632.41.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Motion to approve the weekly disbursements for the week of February 15th, 2023 totaling $18,016,560.20.
I'll second the motion.
I have a motion and a second. Any discussion?
And this is a big number, and I'd ask our financial advisor, or fiscal person, that $13.4 million was sent to the Community Progress Council for the Emergency Rental Assistance Program 2.
Any further discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. On to resolutions.
Motion to adopt Resolution 2023-06, the York County Home American Rescue Plan Allocation Plan. The plan is required to be submitted to the U.S. Department of Housing and Urban Development as a substantial amendment to the York County 2021 Annual Action Plan. President Commissioner is authorized and directed to execute all required documents for the submission of the plan and the administration of the programs.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Motion to adopt Resolution 2023-07, authorizing the execution of an updated cooperation agreement between the County of York and the York County Industrial Development Authority for the Yorktown Hotel Redevelopment Assistance Capital Program Grant.
I'll second the motion.
I have a motion and a second. Any
And I
discussion?
think, Julie, you made a call on this.
Yeah, I made a call about this. So this is just closing out the necessary paperwork for the RACP grant that the Yorktown was given. So
Right.
that's what this is for. It's not for any new funding. Any further discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. There were no executive sessions. Don't think there's anything on the docket for other business. So I'll open it up again for any public comment. If I could have a motion to adjourn.
I'll make a motion to adjourn the meeting.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed? Motion carries. We're adjourned, and we'll move on to salary board.
I'll make a motion to approve the minutes from the February 1st, 2023 Salary Board meeting as submitted.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. I will open it up for public comment. On to item 4.
I'll make a motion to approve the positions, salaries, hours of work, and fringe benefits as provided by existing collective bargaining agreements or as set forth in the York County Employee Handbook or York County Policy Manual for the following departments and row offices as stated below, with no additional benefits or concessions unless otherwise noted, and there is listed in the agenda.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. There were no executive sessions since our last meeting. I will once again open it up for public comment. If I could have a motion to adjourn.
Make a motion to adjourn the meeting.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed? We are adjourned. We are going to skip to the depository board and then back to retirement board because our friend Lee is out there today to educate us on some finances. So we're going to leave the best for last. So I will call to order the depository board. I will.
Make a motion
Sorry. Public comment. That's okay. I will open it up for public comment. Back to you, Barb.
I make a motion to approve the minutes from the September 21st, 2022 depository meeting as submitted.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. We'll move on to new business.
I make a motion to retain the following Traditions Bank account with the requirement that all drafts or orders drawn against the foregoing account must be signed by the Prothonotary or the Deputy Prothonotary. And the account is titled York County Prothonotari's Office.
I'll second the motion.
I have a motion and a second. Any discussion?
Is this changing anything, Barb, or just,
This is a move from a different bank.
Oh, okay.
As an elected official, she has the option to bank where she chooses, and this was her choice.
okay?
Any further discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. Once again, we'll open up for public comment. Barb, I don't think there's any other business.
There is no other business.
Okay. If I could have a motion to adjourn.
I make a motion to adjourn the meeting.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed, we're adjourned, and we're going to skip back to the Retirement Board. Do I have a motion to approve the minutes?
I make a motion to approve the minutes of the previous meeting held on January 18th, 2023 as submitted.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. I'll open up for public comment. We'll move on to new business.
Make a motion to include the following vested individuals on the monthly annuity payment list as listed below. Brett A. Wallace, Sheriff. Catherine A. Woodfield, MHIDD.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
Make a motion to include the following individuals on the monthly annuity payment list as listed below. Michelle D. Breen, Juvenile Probation. Susan R. Emmons, District Attorney. Darren E. Keller, Prison. Faye M. Kynard, Aging. Vicki L. Solomon, District Attorney. Ann E. Valtero, Prison. Kathy A. Waldemeyer, DJ Office Staff.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
I make a motion to modify and approve the following individuals' monthly annuity payment as listed below. This modification is a result of the York County Prison Maintenance Interest Arbitration Award dated 11/29/2022. Jeffrey A. Inners, Prison Maintenance.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries, and we will hear from our esteemed colleague, Lee.
Good morning.
Guys, appreciate the meeting. Be sure to try and keep it efficient.
Thank you. Lee, which file would you like me to open?
The 2022 Q4.
This one?
Do you want me to bring it in PowerPoint in future?
Yes.
Okay.
Yeah, because then you can use this.
So Lee, I'll
You're going to have to.
be your flight attendant today. You'll have to tell
Unless you
me.
give him the keypad.
No, I'll flip the pages.
Okay, I'll only pick a few pages.
Okay.
Um, If you could take it down to the market environment for me. One more page, perfect. We'll cover 3 pages on this. Actually, 4 pages on this, then I'll just hit the observations pretty much for your 3 funds. And we'll call it a wrap. And I'll bring you up
This is 2022 annual report, right?
This is the end of 2022, but as always, I'll bring you up to
Right.
date where you are today, obviously, because you've seen a big bear market rally recently. But as you look there, through the end of Q4 there, GDP did come in for the second quarter in a row above expectations, growing 2.99%. However, the economy is still in a somewhat precarious position. And what we have to do for you guys is obviously look forward, not look back. Look back, that's in the books on paper. And looking forward at the leading economic indicators index, that continues to decline. And really on the back of a weakness in manufacturing and housing, obviously, because of where rates have gone. But we're now eventually 12 months, coming up to 12 months into this Fed tightening cycle, we're now starting to see that impact, a bit of a softness within spending within the economy. If you quickly jump to the next page. So because of that uncertain outlook, the Fed is continuing to raise rates, albeit at somewhat a slower pace now. After 4 quarters in a row of 75 basis point increases in December, they pared that back to 50 basis points. And then so far this year, only a 25 basis point rise. However, inflation is remaining sticky, as we all thought. And actually, the month-by-month number came in yesterday, the print, and it was a little higher, really on the back of high rent, shelter inflation, primarily in service inflation. Good prices are starting to come down, but services are really not. So we've still got 2, potentially 3 more rate hikes ahead of us, and we're going to be well over 5% at this point from a terminal point of view. And looking forward, expectations are that inflation and rates are not likely to come back to where they were pre-COVID to 2018. I think you're going to see higher rates and higher inflation for much longer going forward. If you turn to the next page just quickly, globally, the real take from here is this impact, inflation impact, is hitting everybody in the world. In fact, more so than here in the US, because up to this point we've had a relatively strong dollar. However, if you look at just the chart in the bottom right there, that's one thing to look at, and you're starting to see this impact returns, relative returns of international and US stocks. You can see the yield curve in the purple, that is us here in the US. You can see the green, that's the ECB, and the blue is the UK. And you can see they started their Fed tightening later, but you can see it's now narrowing as ours is starting to slow down. Therefore, our yield advantage is starting to decrease. And you're seeing that impact now. You're seeing the dollar a lot softer, and international stocks are the ones that are outperforming. And I would expect that to continue in line with that narrowing of our yield advantage in the US. So we'll finish on the next page, which is just returns. As you can see, global equities did reverse course in Q4. It was pretty much a risk-on year. You can see risk-on quarter. US stocks are up 7%, but they did lag international stocks by 10%. But almost all of that was due to what I mentioned there, the softer dollar, with the dollar coming down about 8.5% relative to the broad basket of international stocks. So when you look at actually emerging and US and international stocks, they were pretty similar from a return point of view in local currency. Bonds, as you can see, finally they recovered a little, up nearly 2% for the quarter. However, looking purple for the year, down 13%. Worst return for bonds since the index started in the mid-70s. And that was purely on that, what you saw in that diagram the page before, that just the aggressive, steep nature of that Fed tightening cycle. What did help you is you see your bank loans and high yield bonds, think of that private credit, kind of core plus that you see in your OPEB. Shorter duration there, and the floating rate nature of those were very accretive to your fund last year. And then on the inflation sensitive, these are all public inflation sensitive, so it doesn't really mimic how you guys have invested in private, which obviously held up a lot better last year than public. But you can see tips, we're still coming in just slightly above US bonds there for the quarter. And global listed infrastructure is still doing very well in this higher inflationary type environment. So if you move forward a few pages, let's look at your pension fund. If you go to the observation page there, just a couple more pages, we should be there. There we go. And as I say, this will give you the kind of numbers through the end of the year, and then I'll bring you up to speed of where you are now. But you can see there for the quarter, you ended about 478 million, ended the year. You gained nearly 27 million in the fourth quarter, returning 5.8% net of all fees. Gross of all fees, you're right on your policy there of 6%. So far this year, you're back to just about 500 million. You did go a little bit above it, and you'll probably be a little above at the end of this week again. You've gained about $22 million so far in 23, and you're up about 4.5% to 5% so far in 2023.
But what was our highest mark like last year or whatever?
Before the pandemic, you know what? Well, I'm going to see that on the next page. So
That's all right.
year, 541.
Okay, 541. All right.
Yeah. Now, bear in mind, you also took out over that year, you withdrew 18.5 million from that.
Okay.
That's basically your payments for the year.
Right,
Yeah. So, what worked well for you was your higher quality positioning, and then all the alternatives that you've added to your fund over the past few years, your real assets, your infrastructure, private investments, the high yield as you saw. What didn't work as well was the treasuries, because it was a risk-on quarter, obviously, and the timber farmland. First half of the year, that was great for your fund. Still outperformed by stocks and bonds for the year, but with timber, obviously with housing grinding to a halt, that's obviously impacted timber. And then on the farmland side, a bit of a boon. The US and other countries are having to make up the UK in grain. So that was positive from a return point of view. But if you look at input costs in farmland, I'm sure I don't need to tell you this, Bob, when you look at labour costs, fertiliser costs and energy costs, they're obviously very much a headwind of performance in farmland this year. And that's why you've seen some cooler numbers at the back end of the year in that space. But more importantly, 2022, we always look at the one-year number when we come to the end of a calendar year, because that will impact your ADC for this year. And as you can see, no one likes to see, markets were down, you were down just over 53 million there, which was down 9.9%, but you did protect quite considerably against your policy index, down 11.6%. And then just a broad benchmark of stocks and bonds, if you didn't diversify your fund, you could say that would have been down over 14.7. To put that in terms, if you just look at this as a $500 million plan, you actually had more at the beginning of the year. We just talked about nearly 540. But on a $500 million plan, that extra 1.7% protection against policy saved you about $8.5 million. Okay. If you look at it against just the broad benchmark, that saved you over $24 million. Why is that important? As you know now, you're structured a little bit more defensively as you've grown your assets, because we don't want to give them back when we get reversion to the mean. We've got to give something back, but we don't want to give it all of it back, and that's what you've done. Now you've dug less of a hole on the downside over the past quarter and so far this year, because your hole's not as big, your asset value is higher. So when you grow, you're growing from a higher asset value as we recover here. So you're going to recover quicker than most too. Okay, everyone understand how that works. So that was good to see, and it put you in the top 9% of all funds here in the US as well. So very well done, not only against your benchmarks, per se, but also against all the other public funds in the US. If we look longer term, obviously, fund will have gains longer term. That's why you invest in the market. And you've gained over 260 million, and you've pretty much hit that 7.5% net of all fees through all the turmoil over the years. Pretty much right on bench, but again, well above, nearly 2% above just the stock and bond portfolio. Again, seeing the benefit of all the work that you've done over the years to diversify your fund, and again ranked around the top 25% of all public funds in the US. But you've done it with a lot lower volatility and downside. And as I say, you saw why that's important last year. Your real estate, that is continuing. The redemptions are coming in for you as we're starting to see negative returns in that space. At least you're getting your money back. Not everybody is right now. You made some additional just re-ups into your privates during the quarter. And we did have one of your strategies, the infrastructure with JP Morgan, because we hit a level with all of our clients that dropped your fees by about another 4 basis points. So you were able to take advantage of that. One thing on the looking ahead, then we'll just look at two more pages on this. On the looking ahead, when Boom Shine come in and we discuss kind of assumptions looking forward in the middle part of this year, would probably be a time to relook at asset allocation. And something we've not done in many, many years, because we've been in a falling rate environment for years and years, it could be a time you can dial a bit more into fixed income and take your foot off the gas a little bit, because yields are so much higher than what they were 12 months ago. And the outlook for fixed income is so much better than it was several years ago. So I think we'd never want to do that just with blinkers on in isolation without talking to the actuary and looking at, you know, the strength of the fund from a liability point of view, funding point of view. But I think when you come to make that decision on the assumptions this year, let's look then at maybe de-risking this a little bit more. You've de-risked it somewhat through diversification over the past 10 years, but now you might be able to de-risk some by taking a little bit of equity risk off, putting it in a fixed without giving up too much in the way of return because of where yields are now. So just something to be mindful of as we look ahead. And why is that important? If you just go to the next page, this is just one important thing I want to show you here. If you look at your cash flows, if you look at it from a net point of view, last year you're down over 10 million net came out. Compare that over 10 years, just over 30 million, so you've averaged about 3 million a year. So that's growing, the amount of money that's going out every year. So again, what a great time. Funds well funded. Maybe we add a bit more to fixed because you want a bit more liquidity and safety in your portfolio because you're having to sell more every year as the fund matures. Let's just jump on to some of your strategies. If you go forward about 6 pages, we talked about total fund performance. You know all about the risk. Okay, yep, sorry, that page. I'll just finish on these last, just the page above. Sorry, one more page. You're so well diversified, you go on 3 pages now. But as you can see here, just quickly on your equities, total equity composite for the year down 15.9 relative to down 18.2. Lean into value, pretty much higher quality strategies. You can see that straight down that sheet there, whereas, you know, Twin obviously defended last year as you would expect. Same thing with Ernest. They were both well above their indices. On the global side, it's your value manager, Dodge & Cox, that protected very much last year, and the MFS, your low vol manager, down only 7.6, when global markets are down 18.4. What didn't work as well was your growth manager. That's the type of manager that's doing well, obviously, this year, as we're seeing growth come back, and did a lot better in previous years when growth was ahead. But again, that higher quality structure is why you were quite a bit ahead last year on equities. If we turn over, sorry, next page. You can see on the international side, pretty much right on the money for the quarter in the year. Lean into value helped somewhat, but what was a little bit of a headwind was the smaller companies and the emerging markets from an absolute point of view. But you can see both of those managers outperformed their benchmarks for the quarter. More importantly now, as we hit the alternative space, as you can see, defensive equity was about 100 ahead for the quarter. Did lack a bit because of short-term volatility earlier in the year, but that's really paying back now. As you can see, premiums are still high. The good thing about that is 75% of that portfolio is just sitting in cash, T-bills. Last year, that was making nothing. This year, it's making a lot more for you. So you're getting basically 4% right off the bat just with holding the cash in there now, which you didn't get last year. So the outlook looks a lot better there for you. Real estate, as you can see now, we are starting to see a little bit of softness and markdowns as people are kind of bringing it more in line with where you saw REITs go. We expected that, which is why we put in redemptions back in the second quarter of last year for you, because we kind of knew this was coming down the pike. You're probably going to see softer numbers over the next 2 to 3 quarters in real estate before that recovers again. But you saw the benefit of that last year with stocks and bonds being down double figures. Your real estate was up about 9% for the year. So again, that was a good anchor for the fund. And then final page, and this will be wrapped up for you. On the infrastructure, again, wonderful investment for you. Again, sourced from stocks and bonds last year. You've made up nearly 9% again in infrastructure last year. And we will expect that to continue to do quite well because infrastructure is less dependent on where inflation is going. It's more linked to where inflation is at. So if inflation is falling, but the absolute number's still very much high, a lot of those contracts are linked to CPI where it actually is. And therefore, that's why the income, JP Morgan's strategy there, up 9.5, that is pretty much all income driven in the portfolio. That's the kind of income you're getting in on those type of assets. Timber farmland we talked about, down 1.4 for the year, but still well ahead of stocks and bonds. Kind of ignore that bench. That bench is more of a long-term private bench. As you know, with this Hancock fund, you do have quarterly liquidity, so it does have to mark a value every quarter. So they're bringing that valuation more realistically ahead of the benchmark. So next year, you'll probably see that flip. And over a full market cycle, they'll be fairly similar. Private equity, you can see last year up 2.9, when you see bench was down 14.1, so that's a good start for you. And since inception, they're up 12.1 when the bench has been negative. Private credit, similar thing there. You're up 1.5 last year, and since inception, up 2.1 when the benchmark's been down 0.5. So again, all of these anchors are the reason why your fund didn't go down as much last year. And then fixed income, as you can see, you're never going to be too far off the index there. What was a bit of a headwind was more of the defensive nature and the longer duration of your treasuries. Last year, that was offset by the shorter duration credit and high yield that you can see towards the bottom of that page. They were down much less, as you saw in the market environment. So that, I know, somewhat a lot to cover in short time, but you do have a lot of investments. As fiduciaries, it is important, to look at it once a quarter. But as you know, we drill down a lot more. There's pages in your report, especially in the large report I send each quarter, which has all of the detailed information on all of these strategies under the hood. That if any time anyone has any questions, feel free to call me and we can work through them. But I know you don't want to work through that in this meeting. Any questions on the pension before we move to the OPEB? Okay, we'll just cover the OPEB and 457 off the one pages. So I think it's about 4 pages forward from there. Oh, no, sorry, it's in the same report. Yeah, I didn't want to be messing about. Yes, if you go forward, page 38 on the bottom right there. There we go, perfect. So just like the pension, you can see OPEB, strong return for Q4, up 7%, gaining $2.5 million. You're now at 36 million. You gained about 5.5% in OPEB so far this year. And again, no shock, very strong performance, 17th percentile. Similar things work for you this quarter. You do have obviously a lot less in diversifying assets within this portfolio. Obviously the fund's a lot smaller. You can't get into some of the private areas of the market, and it's listed infrastructure, not private, but still they were very accretive relative to your benchmark. And similarly, as you just saw on the pension, treasuries were a little bit of a headwind, as you would expect in a risk-on type quarter. Again, like the pension, you're protected on the downside. Not as much, again, with the OPEB fund, because as I said earlier, you don't have as many privates in there and diversifying assets. It's a smaller pool. But it still did protect, even with all traditional assets. You were down, you're about 70 basis points above your index. But more importantly, 28th percentile. So you weren't top decile, but you were still in the top third of all defined benefit type plans. And again, longer term, over 5% net of all fees a year. You're always going to be kind of gross net of fees close to the policy here, because you do, with it being a smaller fund, you do have more passive investments to keep your costs down. But again, with that emphasis on lower volatility and downside protection. Similarly here, real estate redemptions are coming in right now, and you did actually have a big lump sum come out, a big allocation come out of over $3 million in December, which is why, again, you structured it to be a little bit more protective on the downside, because when you have these big lumpy flows, last thing we want to do is after a big correction. Fortunately, you had a 7% return before you kind of got those, had to redeem those assets. And then just like the pension, same thing on the OPEB. We may be able to look at this and de-risk it some, but again, we'll do that along with the input you get from the actuary. So anything on the OPEB fund? Okay, the last one, 457, and that is going to be, the page number on the bottom will say 52. Perfect, great. So this one, we don't have updates intra-quarter, but you can see you ended the year about $25 million. 3/4 of all your active funds did outperform during the quarter. The JP Morgan Growth Fund, you should see that replace T. Rowe here in very short order. I believe that date is coming up here in the near future. And then the last thing, within counties, it's not unusual to see because you do have such a good defined benefit for employees, and employees tend to max out that before then putting assets in defined contribution. So when you look at participation rates as a whole, tend to be somewhat lower, so you can see 19% there. But more importantly to me is, okay, where are we trending now? Are your employees getting engaged? Are you getting engagement from Empower, from your advisor who's working with you too on that? And the answer to that would be yes, because whenever I look at those three bottom rows there from a trending point of view, participation rate continues to increase, contribution rate continues to increase. Those folks that are contributing over 10% continues to increase. So it looks like the engagement is at least trending in a positive manner there, which is good to see. And then just finally, if you want to go to the next page, just to see where your investments are, you can see you have a good high quality lineup, somewhat simple, but enough choices there. You've got an investment option across large cap, core growth, small and mid cap core growth. They're the SMID products here, although we name them more kind of small cap. You've got global value core growth. You've got international core value growth. You've got real estate. And then if you turn the next page, we'll finish on this. Again, you can see you've got a good diversification within your fixed income. You've got low-cost indexes, you've got active management, you've got an international high yield, you've got tips for those concerned about inflation, you've got treasuries for those concerned about risk. So about 31% of your portfolios, of your employees are actually making those decisions and adding to those funds. But most folks, as you can see, nearly 70% here, are where they probably should be in the target date funds. And they're very low cost at 8 basis points. So those will glide out over time as people approach retirement. That's kind of where most folks who are not looking at this week by week should probably make their investment. And that's why your overall investment management fees for this are extremely low. You're all in 12 basis points, which is very good for your employees. I'm a bit parched, so timing of that is good to wrap up there unless anybody has any questions.
No, just for Greg, though, are we starting now new classes for people to look at the deferred comp? Because even though we're at 19%, it's such a great program that it'd be nice to increase the participation.
Week after next, we're having our first quarterly, and then we'll have 3 more after that.
Okay.
One at the Judicial Center and one here. And then we'll go out to Pleasant Valley. Maybe prison.
Yeah.
Prison for a while.
Thanks, Lee.
Thank you.
All right, there are no executive sessions. I will once again open it up for any public comment. I can have a motion to adjourn.
Make a motion to adjourn the meeting?
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed? We are adjourned. Thanks, everyone, and have a great day and enjoy this beautiful weather.